Alright guys, what's going on? In this video, I just want to break down a little bit of what we got going on, this outlook moving forward for next week. So, I've talked to most of you already, but for those of you that do not know, I will be away, okay? I'm going on vacation, first vacation of the year, okay? So with that being said, I don't want to leave this as a dead time for all of you. I want to still be able to get some content out for you guys. I'm not going to be able to be in live trading while I'm 6 hours ahead of you guys in time, right? So I want to make sure that I have as much content as possible for you guys so that this 10-day hiatus isn't necessarily going to just be a stop in the growth. Okay, from what I've been seeing, I'm very, very impressed with the growth of many of you, and you know who you are, but there's been a lot of you that have really shown strides to not only be accurate but also consistently accurate, right? That's the end game. That's what everybody wants to get to, and I'm super impressed by that. There are also a couple of people who I'm starting to notice it just by where they are in some of the comments that you're really close, you're knocking on the door, and that's why, to me, stopping and not staying on top of this on a day-to-day basis, we can't have it, right? We got to stay on it. So I just kind of want to give a little bit of an overview of what I have planned for this upcoming week. Now, I just have to tell you all in advance that this 10 days off for me is extremely needed. I'm fucking burnt out. I gotta be honest with you guys. I mean, at this point in the year, what have we done? 200, 300 hours of, probably even more actually, of content. I actually don't even have a real number, but we have hundreds of hours. I've been pretty consumed by this, and to be, honest with you guys, that this year has really been my best yet, and I've been locked in on a different level, as you can see if you've been following along on X or if you've been following along in the Discord. Our higher time frame outlook has been essentially spot on, and that's with a market crash in April. So throughout it all, I mean, I've been totally locked in, and I've noticed the last week or so that my smaller time frame precision has not been as accurate. So I think luckily for me that this is this little break, this vacation is coming in at a good time, because my analysis in terms of like the timing of it, the timing has been the issue, if you will. Right now, what we're currently dealing with, it doesn't really meet the criteria for a trade on either side of the coin when it comes to indices. Now, of course, we have individual names that are running through and making new all-time highs and everything like that, but just from an index standpoint, I really want some more clarity, and to be honest with you, I would be really thrilled if we could just go in and see that weekly imbalance. But I've noticed, again, we've been really locked in throughout the year, and just this last 2 weeks, the market really hasn't presented it, so it's not like, it is what it is, but there haven't been as many opportunities. I've noticed that the smaller time frame fluctuations have been a little bit more difficult to read. So I'm, I got lucky coming at a pretty good time where taking 10 days, I'll be popping in here and there, but it's going to be nice. It's going to be nice. I need to refresh, and when we come back, we're going guns blazing to the final stretch of the year, all right? But like I said before, I kind of just want to talk about a couple of the things that we're going to go over. And of course, if you have any questions throughout any of the videos, right, I'm going to try and release them day by day. I might also just plop out 10 videos and just, let you guys add them at your own pace. But if you do come across a question at any of those, feel free to reach out. I know I'm away, but I'm going to be looking at my phone at some point throughout, when I'm about to go to sleep or something like that. So I will get back to you at some point if I don't get back to you immediately. So don't feel, weird or like you're annoying me while I'm away. That's not the case. Just feel free to put it out. I'll get back to you as soon as possible. And, we'll keep going from there. But really, the focal point for at least a decent chunk of these videos that I'm going to be doing here are not simply just conceptual videos like we have in the beginner's guide, right? So if you're newer here and you still want to get a little up to speed, you could definitely check out the beginner's guide. I have some videos in there that are probably they're 20 minutes long, but after those, I have a strong feeling that you're going to be looking at the market in a much different light moving forward. In addition to that, what I really want to focus on in some of these videos is just the psychological aspect of things. Okay, so it's kind of funny now. When I first got going here on X 5 years ago, it was a very different Mando, right? I was not as consistent, right? Really, if you guys know the backstory, I came in with a pretty decent amount of money at the right time in 2020. I had a little bit of knowledge. I'd been interested in the market since about late 2018, where it was, again, I really just didn't have any idea of, how quickly some of these moves could occur, right? So I came in at the right time, good amount of money, set me up very nicely moving forward. And then from there, I was able to, kind of build a life off of this, right? This is a full-time gig for me at this point. And, along the way, there have been bumps and bruises just like anybody else. But, really, I would say since probably mid to late 22 was really when I started to hit my stride, and the level of consistency was really off the charts. So really, I want to share some of the psychological things or hurdles that I had to overcome along the way that I'm sure someone out there is going through at this exact time. This is not necessarily something that varies from person to person. Of course, the account size does, and even maybe some of the risk tolerance, sure. But a lot of the hurdles and obstacles you're going through are something that I or someone else who's got much more experience in the group have been through at some point or another. So if I can echo that to you, maybe that's cuts a little bit of time off your overall development and your progression to get to the point where you want to be on a consistent basis. So I'm Unk now. All right, Unk Mando. You can call me that. All right. But yeah, so like I said, the psychological component to it is very layered, and I don't typically talk about the psychological component. And the reason I don't do that is because I do not believe that your psychology, your trading psychology, that's a buzzword that a lot of these people who don't know how to read price or talk about anything else talk about, because it can kill time and you can kind of just ramble on it. But to me, psychology doesn't mean anything if you don't have an idea of how to read price. If you don't have an idea or a set model in place where you can start to anticipate price moves, it's not going to matter what your psychology is, right? Oh yeah, I had a winner and I couldn't take profits. Yeah, because you didn't know where to take profits, right? You didn't understand that at buy side liquidity, that would be a pretty reasonable target to complete the Mando model and ultimately take some profits off. I had a stop loss and I couldn't take it. The reason why you had a stop loss and you couldn't take it is because, one, you probably didn't have the stop loss placed in a legitimate place where you can back that with factual evidence from previous examples to provide you some confidence that, okay, this is the stop loss. If it does go here, I need to get out because I've seen a move like this happen many, many times previously. And when that happens, it tends to get out of hand. And I'm not going to let it get out of hand, right? That's an experience thing as well as just kind of having a general idea of what to do. So really, psychology, I don't put too much of a paramount on it until you can prove to yourself that you can read price. Until you type in our Post Your Charts channel and say, okay, here's my low-hanging fruit objective, boom, and you start to snowball. You start to notice that, oh wow, now 80% of my daily objectives are getting hit. Oh wow, my low-hanging fruit objective assignments are doing really well, right? And when you start to see that snowball, then you start to realize that the psychological aspect of things does get more difficult. Now that move up to your target, you're no longer not knowing where to take profits. You're now asking yourself the question, do I have enough time on this contract to see if price is going to make that imbalance and offer me some continuation? Or is this enough? Because if we were to retrace here, I do not have enough time on this contract to see the whole retracement and run back through highs through. Right? It's just from a different lens, because now you have an idea on how to read price, where price is likely to go, And now what you're really dealing with at that point is just, you're at that point, you get to the point of battling yourself. You're not battling yourself when you don't know what you're doing. Yeah, you're just getting your money taken by the market. So just in particular, there are a few things that I think, I've kind of narrowed in on, and I think these could be really helpful to a lot of people. And the first one really to me is just the mentality of a winner. I don't see it too often, which is really a good thing. But having that loser mentality, oh man, it's always me, I can't catch a win, blah, blah, blah. Do you really ever expect to win with that attitude? Probably not, right? The thing I listened to, this was years ago, and I thought this was like great. It's gonna sound so silly the way I say it, but you guys should all check it out. It's by some guy Jocko Willink, and it's titled "Good." I think actually Biscuits brought it up, but shout out to Biscuits, thank you for that. But he brought this up, and I was like, wow, this is like excellent, right? And it's just like, oh, okay, something didn't go your way, good. Now it's a hurdle that when I reclaim, and when I do end up defeating this is just another notch on the belt. Now I can continue with some more confidence that I overcame this hurdle, right? Oh, I lost a trade. Good. Guess what? Now I'm learning from my mistake, and I'm going to the next one, and I'm going to attack it. That's really the mentality you need to have. But when you're passive, when you are soft, and when you are afraid, which is another video that I have here, there's no shot for you here in the marketplace. As you probably already know, this market does not care about your feelings, okay? This is not a living thing that has empathy towards you. Just the mentality of being a winner, what it takes to be, a winner. I don't post my wins and stuff to brag to you guys. It's to kind of give you guys like a, wow, okay, I'm seeing him do this on a consistent basis, whether it's day to day, week to week, whatever it might be, but I'm seeing this happen over and over again. This dude's legit. I'm not doing it to brag. I'm doing it to prove to you that you can do it. You have to believe that you can do it. And to me, you have all the tools necessary. If we had like a 50% drop-off rate in the group, and we had nobody posting big wins consistently, I'd say, okay, maybe there's something wrong with what we're doing here. But the fact that a large majority of this group is doing really well, consistently showing success, while also we have like 9% of people that have ever joined leaving, there has to be something here that works, right? So it's really about buying in. It's really about having the right mindset in order to really take this and run with it. Okay, so that's one of the bigger things that I want to talk about. I want to talk about fear, okay, because whether you've been there or not, you will be at some point where there's like legitimate fear when you're placing this trade. Like you are just scared that you're going to be wrong. Maybe it's too big of a risk. Maybe it's too big of a maybe you're stepping out of your comfort zone with too many contracts. Maybe you just don't believe in what you're doing just yet, right? But I want to talk about fear and how you can kind of overcome this, and some steps that you could take to do so. Another thing that I want to talk about, kind of staying on that same overall idea about like the psychological component of this, would be just certain like case studies, certain scenarios, right, that you're going to cross. But the video really is probably not going to be all that useful for people who haven't put in like the foundational work, right? I always say there's 3 steps to this. Learn the concepts. After you learn the concepts, you need to be able to go back in time and see it. You need to be able to see these price moves take place following the Mando model, odd nam, or any of our price rating principles, and say, oh yeah, I see that. Great. Because if you can't do it in hindsight, there is no way you're going to make it to step 3, which is ultimately anticipating price. And in order to anticipate price, you essentially have to prove it to yourself. You have to prove that you're seeing this, that this works, this is something that you find value in. And if you don't do that, then anticipating price is going to be very difficult. So that's just another. And really the last on that psychological, kind of standpoint would really be the idea of, like avoiding doubt from others. Okay. This one's really layered. Okay. if you were to tell anybody that you're trying to make money as a trader in the stock market, they're going to laugh at you. They're going to talk behind your back. You're just going to feel self-conscious about that. And to me, you don't need that. Whether it's trading in the market, whether it's whatever you're doing, side gig, you're making an Instagram account, posting clips, like whatever it might be, when you tell other people, like automatically, they're probably not going to want you to succeed. Jealousy's real. They're not going to be happy with you finding success, sitting at a computer pushing buttons while maybe they're working construction, sweating their butts off and or some manual labor job, right? I think everybody automatically, whether they love you or they don't, the ones that love you will probably want you to be safe and take the safe route. Those who don't really love you kind of want to see you fail. And all of that stuff you don't need, especially when you're taking on a journey as difficult as this can be. So those are just some of the psychological hurdles that you're probably going to either see very soon or somewhere down the line. But I think all of those will be extremely helpful moving forward. Now in terms of actual concepts, okay, we're going well beyond the generic imbalance, market structure shifts, liquidity, right? All of that stuff is in the foundation, the beginner's guide. Take that seriously. If you're finding yourself like, okay, I'm watching Mando live trading, but like he keeps bringing up a breaker, like what is that? Beginner's guide. Okay, there's a video for it. It is very concise, okay, and it's not very long. It's not a big ad revenue catch, okay. This is going to be kind of like, all right, we're going to take another little step up, right? Because there are times when we'll have like a weeknight call that we'll have like basics. We'll have very, very, very in-depth analysis, and then we'll also have middle of the road stuff. Okay. So now think of like what we're going to talk about. This is like beginner's guide part 2 for like level 2 or step 2, right? We're not talking about the basic concepts. We're just talking about them in practice. Okay. I know we do it in live trading and stuff, but for those of not everybody can join the live trading. So, but some of these concepts would include, just the idea of playing probabilities, right? Is this high probability? Is this low probability? I'm going to get in depth on what I mean by that, okay? Because that, to me, is something that's very important. You could be correct, a majority of the time, maybe even 80-90% of the time. But how many times is that tradable? How many times are you going to sweat that out, right? We had an example today where, the initial run was a good one. We then retraced back below where the imbalance was. And then we ran up back again, right? And, someone was like, well, man, if I just stuck with my idea, I would have blown it out of the water. You took profits at the first point. First off, that's great. But second, would you have been able to stomach a round trip on that? Probably not, because it was low probability. We had a 5-minute bullish setup inside what was overarching an hourly bearish setup, inside a 4-hour bearish setup, with no daily, weekly, or monthly bias at that moment. Okay, that's low probability. So we're going to talk about finding those high probability trades in order to kind of help us get to a point where we are much more consistent in our analysis. The next thing that I want to talk about as well is just kind of debunking some of these, general trading, I don't even know, like terms, I guess you could say. We're going to debunk the cup and handle. I'm going to show you when the cup and handle would work and when it wouldn't work. I'm going to show you when a double bottom's a double bottom and when it is not. Because the books don't tell you, and neither does the Furu who posts about it. He only posts about it when it fits his narrative. Okay? And there's a couple other of those very common, talking points that people just talk about because they feel like they don't need that in-depth knowledge to talk about it, right? If you go on a trading space, they don't have many anymore, but they used to. But, geez, I mean, it's like, okay, what do you have, a textbook open and you're just reading off the textbook? Where is it in practice? Why does it do this? Why does the cup and handle retrace and make the cup handle? Why does it do this? What is a bull flag? What is a bear flag? All of that stuff is going to get debunked for you next week. Promise you that. Another thing that I want to talk about really would be just the idea behind high resistance liquidity runs and low resistance liquidity runs. And in particular, the idea of controlled demolition and controlled construction. Two similar things, just varying directionally. But these are the ideal price runs that we want to have positions a part of. We don't want to really be fighting a high resistance liquidity run. So I'm going to show you how to identify that so that we can be in trades with high probability and also a lack of resistance in the way for us to ultimately get to our goal. Some trades are going to meet all the criteria, some aren't. Now it comes down to you making the decision. Does this make sense for me where I'm currently at? And to expand off of where I'm, the whole where I'm currently at, we had a couple of requests. One being for the just general breakdown of like, as a small account, like, how do I go about this, right? What is there anything different, or what can I really do to be like, set myself up in the right path here? And of course, I'm not gonna tell you what to do. I'm just gonna tell you from my standpoint, from looking at things from a smaller account mindset or strategy, to obviously protect what you have and ultimately try and be consistent to grow that thing, because it's not easy. It's not. But another one, really, we could talk about, just like the selection of strike prices. We could talk about, how far out I tend to go. We could talk about the Greeks, delta, gamma, theta. Things like that I think could be very helpful to those who, you've probably heard me talk about it in the past, but you want more time spent on that. And, we could talk about that in much more depth. Another one would be just when I tend to trade individual stocks instead of trading the indices, aka basically what we're seeing right now. Made a huge pivot to trade individual names rather than the indices. Why? So I'll explain that in a video as well. And then one funny request, but I think it is also a pretty good one. Top 5 signs you're being grifted by a furu. If they don't go on voice, they're probably phony baloney. If they're stumbling over their words every second, they're probably a phony baloney. If they cannot explain their model in a clear and concise manner where they can show you previous examples and also post before the move happens, probably a phony baloney. Now, I know a lot of people gravitate towards the people with big followings, and I guess technically I do have a big following, but I think this is probably why I go over the top with me going on live streams and me talking. I don't do ads anymore. I don't really get all that many views on YouTube, so, the ad money's not really good. But to me, it's just a way to prove a point. Prove a point that I'm better than all these losers. No, I'm kidding. Not really, but kind of, right? But I just want to prove to you that you can get to a point where you could read price without the need of anybody else to dictate what you're doing, right? If somebody wants to feed you an alert, they really don't care about you, to be honest with you, right? If they did, they would teach you how they got to that point, but they won't. And the reason they won't is because they got you. Once you start paying for that alert service, they got you. You are fully reliant on them. As a grown individual, whether you're a man or a female, do you want to be reliant on anybody else for your own growth? I don't think so. You should learn how to trade. I promise it's worth it. Another one would really just be the idea behind turtle soup, okay? Sweeping liquidity, that is very important. And last but not least, I really want to talk about the idea or the nature of fractals in trading, on how every time frame is telling you a piece to the story. Okay, when it all comes together, it's a beautiful, beautiful story. But how do we get there? And that is through multiple time frame analysis. I call it the time frame surfing. Okay, so we'll talk about that as well. So now, of course, this video is more of a, just preview of what's to come. But I did, want to put this out there just so you have an idea of what's coming this next week. Just note that, of course, will not be live trading during those times, and our nightly calls that we tend to do during the week are going to be replaced by these videos on these concepts that I have put together for you guys. So think of it as, okay, I got the beginner's guide, let's go to step 2. All right, so that's all I got for this one. I look forward to posting these, and I look forward to taking a few days off. Trust me, it's about time for a little bit of a break. Usually in years past, I usually take multiple, and I'll I'll spread them out throughout the year so I don't burn out. But you kind of gotta strike while the iron's hot, and we've been pretty hot, so I didn't want to give it up. But because we are slowing down on the indices, the smaller time frame has become much more of a we're just grinding around a lot, and when that happens, are you really going to trade shorter dated options? Probably not, right? You're kind of setting yourself up for failure there. So, but anyways, that is all I have for this video. Now, of course, my mouse did end up dying, so I'm kind of just talking right now to kill some time while I get my other mouse plugged in, and I can shut off this video. But again, with all of that being said, I want to make sure that the growth isn't stunted by me being gone for 10 days. It's time to open the wings and fly a little bit, and of course I'm going to have some more content for you, but you can do this. So I will talk to everybody next time, and good luck. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.